Hi, Assalamualaikum and a very good day to everyone. This video I will explain the chapter 3 under macroeconomics, which is determination of national income equilibrium. So what will we learn in this chapter? Okay, these are the learning outcomes. The first one, to understand approaches in determine national income equilibrium. The second one is to explain concept of consumption and saving. And the third one is to determine break-even income. So let's look at the approaches to determine equilibrium. So there are two approaches, which is aggregate demand, AD equals to aggregate supply approach, and the second one, injections equals to leakages. So these two approach will determine the value of Y, which is national income. In economics, national income will always denotes as Y. Okay, let's look at one by one. For aggregate demand, aggregate supply approach, actually, aggregate demand is the total demand for goods and services in the economy. The first item under aggregate demand is consumption, or capital C. Second one is investment, I. The government spending, G, and the net export, which is export minus import. So these four items we include under aggregate demand, whereby the aggregate supply, AS, or aggregate output is the total quantity of goods and services produced in an economy in each period. So how to get the value of Y we get when the aggregate demand equals to aggregate supply. The second method, or the second approach, is by using leakage injection approach. What does it mean by injection? Injection is an income that can be raised within the circular flow. It is an addition of spending to the income expenditure stream. So the items under injection include investment, government spending or government expenditure, and also export. So these three items will be injected into the economy. And the second one is leakage. Leakage is an income received by all sectors in the economy which is not distributed within the circular flow. A withdrawal from the income expenditure stream, and it includes savings, taxes, and imports. Because saving, taxes, and imports will be excluded from the income activity. Okay, so before we go further to get the value of Y, you have to know the theory of consumption and saving first. Okay, first, consumption theory. For this syllabus, we divided the consumption theory into conventional and also Islamic perspective. So, the first one, I will explain the consumption theory. What is consumption? Consumption refers to the purchase of goods and services by individuals or households that are produced by firm. Okay, so consumption is when the household spend their money for the goods and services that being produced by the firm. So the income is divided into two parts. Okay, income divided into consumption, and part of the income will go to saving. So here Y equals to C plus S. So here we go to the concept of consumption. First, average propensity to consume. What is average propensity to consume? This is APC, is the ratio of total consumption to total income. So how to calculate the APC, total consumption divided by total disposable income. C divided by disposable income. Actually, this income is, we refer to disposable income. We denote as YD. Meaning that this is APC is the portion of your income that is used for consumption, for shopping, for example. Okay, and then we look at the marginal propensity to consume. It is the ratio of change in total consumption to change in total income. So when to calculate MPC, percentage change in total consumption divided by change in total disposable income. If your income increase from 1,000 to 1,200, so how much is the percentage, the change in consumption? So this is the MPC. Later I will show the example of APC and MPC. Okay, so for consumption function refers to the relationship between consumption level and income level. So the general equation for a linear consumption function can be written as C equals to A plus B y D. C is consumption, A is autonomous consumption, which is independent of income, B is MPC, okay, or the slope of the curve, of the consumption curve. Okay, this one is consumption expenditure, the value of consumption expenditure. A is autonomous consumption, B is MPC, YD is disposable income. And the value of A and B can be any value, can be substituted by any values. For example, C equals to 100 plus 0.7 YD. So can be any number. Okay, now we move to saving theory. Saving is divided into autonomous saving and induced saving. What does it mean by autonomous saving? Autonomous saving refers to the part of savings that does not depend on the level of income and occurs when there is autonomous consumption. Induced saving refers to the part of savings that depends on the level of income. That is the difference between autonomous and induced. For autonomous, that is independent of income, and induced saving depends on the level of income. For example, if your income increase, induced saving also would be increased. So let's look at the concept of saving. It's quite similar to consumption theory, concept of consumption. We have, under consumption theory, we have average propensity to save, APS, and MPS. Okay, let's look at what is APS. The ratio of total saving to total income, meaning part of your income that is used for saving. Okay, so that is the APS. Total saving divided by disposable income. And from MPS, marginal propensity to save, is the ratio of change in total consumption to change in total income, meaning the percentage of total saving divided by percentage of disposable income. If your income increase, how much is the percentage change increase in your saving? That is MPS. Okay, so let's look at the consumption and saving schedule. Actually, APC plus APS equals to 1. For example, I told you before, YD equals to C plus S. Okay, let's look at the table here. 100 equals to C plus S. 125 plus negative 25 equals to 100. Okay, if 200 plus 0 saving, so equals to 200. Okay, and then for example, your income is 1,000. Okay, 1,000, and consumption, I'll give you one example, 800. plus saving 200. So here, what is APS here? A portion of your income is used for consumption. What is the ratio? So how to get? C 800 divided by 1000, meaning APC would be 0.8. And APS, part of your saving that is used for, part of your income, disposable income, used for saving, meaning that APS equals to 200 divided by 1000. So you will get 0.2. So here, APC plus APS equals to 1. 0.8 plus 0.2 equals to 1. That's why this, you have to know APC plus APS equals to 1. For MPC and MPS, also similar to APC and APS, MPC plus MPS equals to 1. Okay, for example, from the income 1,000, 1,000 increase to 1,500. So there is a change in 500. When your income is 1,500, your consumption, I would say it is 1,200 and your saving 300. Okay, so equals to 1,500. How to get MPC? MPC, when your income increase, how much is the ratio for your consumption to increase? So from 800 to 1,200, there is an increase 400 divided by 1,000 increase to 500, which is 500. So you will get 0.8. Okay, and then for saving, increase in saving, which is 100 divided by 500. So 0.2. Okay, so here MPC is 0.8 plus MPS is 0.2 equals to 1. You also can see from the table, if the disposable income 300, the consumption is 275, saving 25. So 275 plus 25 equals to 300. So from this, APC 275 divided by 300, you will get 0.92, and 25 divided by 300, you will get 0.08. And for MPC, an increase from 200 to 300 and 200 to 275 for consumption. So 75 divided by 100. So 0.75. And for saving from 0 to 25, the change is 25 divided by 100. So this is 0.25. MPC plus MPS equals to 1. APC plus APS equals to 1. Okay, and then MPC is similar because this is the slope of the curve, of the consumption curve. And MPS also is the slope for saving curve. So let's look at the saving function. Before this, we look at the consumption function, which is C equals to A plus BYD. And for saving function, similar to consumption, is the relationship between saving and income level. So the saving function is S equals to negative A plus 1 minus BYD. Saving, negative A is autonomous saving, 1 minus B is MPS. If you still remember, B is MPC. So MPC plus MPS equals to 1. So to get MPS, 1 minus MPC. So from the consumption function, MPC is B. That's why the value here 1 minus B. And YD, this is disposable income. So we can just derive the saving function from consumption function, or derive consumption function from saving function. A equals to A plus BYD. So A, you just change to negative value. B, you just add 1 minus B. Okay, for example, consumption function, for example, C equals to 100 plus 0.65 YD. So for saving, this value you should change to negative value, which is negative 100, and 0.65 you have to get here 1 minus 0.65, which is 0.35 YD. You have to remember this one. If we add for MPS and also MPC equals to 1. Okay, for example, MPC is 0.75, so MPS would be 0.25. If consumption function 0.8, MPS will be 0.2. Easy, right? So they give consumption function, but they ask for saving function, or the other way around. You just change the figure. Alright, so that's for consumption and saving theory. And then, okay, now we look at the factors influencing consumption. What are the factors? What are the determinants influence consumption? The first one, expectation. Consumer views of the future will affect current consumption. Expectation may involve future inflation rate, likelihood of becoming unemployed or receiving higher income. For example, consumer expect or predict that there would be higher inflation next month. So they will consume more for this month, for the current. Okay, that's why they state that consumers' views of the future will affect current consumption. If they predict the price of chicken will be expensive, more expensive next month, so they will consume more for the current month. Okay, so that is expectation. Wealth also another factors that influence consumption. Wealth owned by household includes both real assets such as houses and financial assets such as cash, saving accounts, stock, bond. So wealth will, if you get more wealth, you will consume more. You will make more consumption. Another factors is price level. Changes in price level will reduce or enlarge the purchasing power of financial asset with fixed nominal values. Level will reduce or enlarge if the price level becomes more expensive. Is increased. So what will happen? They will reduce the purchasing power. So will reduce the purchasing power of financial asset. They will be less on consumption. Okay, next one is interest rate. A decrease in interest rate on loans will encourage consumers to borrow more credit to finance their expenses. Okay, a decrease in interest rate, so cost of borrowing becomes lower. So you tend to make more loan to increase your credit and to shopping more, to consume more. Okay, that is for interest rate. And the last one, stock of durable goods. So these items you can read by your own for more understanding on your textbook. Islamic consumption theory. The difference occurs when Islam emphasizes the relationship between consumption and the life hereafter. For the Islamic consumption theory, we use the Fahim Khan consumption theory. So there are factors that affect Muslims' consumer behavior. What are the factors that will affect us as a Muslim? The first one, the belief in the hereafter. We believe that adanya hari akhirat. Okay, a Muslim's consumption of goods and services should comply with the Sharia and obey the rules predetermined by Allah. Consumption does not only aim at dissatisfaction in this world but also the rewards in the hereafter. We cannot simply consume without concerning halal and haram, without thinking about the hereafter. So we will choose the halal product, halal and tayyiban, to get the more rewards in hereafter. The second one, the principle of al-falah, success. This principle is according to Islamic framework is when a Muslim obtains the blessing from Allah. Al-falah is the Arabic word which means complete happiness in this world and the hereafter. Whatever we consume in this world, we will think about the happiness in the hereafter, in shurga. Okay? The principles of wealth. Every Muslim believes that Allah is absolute owner of wealth and property, and we as a man is a trustee or khalifah. Okay? And hence, Muslims should manage all the properties, all the wealth according to instruction of Allah for the benefits of mankind. Next is the principle of consumption and of goods and services. The consumption of goods and services must be clean and pure, or must be halal and tayyibah. Okay, Allah has permitted to consume goods and forbidden bags. And the last one, the ethics of consumption. The ethics of consumption is do not consume goods and services for own satisfaction only, but also for satisfaction of other. Consume halal and goods only, and do not over consume goods and services. Okay. Yeah. Okay. That is the ethics of consumption. The last part for this video, I will explain the investment. There are two types of investment. The first one is autonomous investment, and the second one is induced investment. So, for autonomous investment, similar to autonomous consumption and also autonomous saving, the word autonomous meaning it is fixed and independent of income. As the income increase or decrease, the autonomous investment is always fixed, does not increase or decrease. Okay, and for induced investment, it depends on income. As the income increase, the investment also increase. So the level of investment will always depends on income level. And the last one for this part, you have to rate by your own the factors that affecting the investment. Okay, that one I do not explain in this video. You have to rate by your own, and if you have a question or any problems regarding the factors affecting the investment, just ask your tutorial lecturer, which is me or Madam Hamiza or Dr. Shuk. Okay, so that's all for this video. Later I will explain how to determine why the value of national income in two-sector economy. Okay, everyone, thank you for listening and see you next video. Bye-bye.